Warren Buffett says if you don't find a way to make money while you sleep, you will work until you die. So check it out, you're in luck. I have a super simple way for you to begin making money while you sleep. It is ridiculously easy. How easy?
Easy peasy lemon squeezy.
This is a special request video going out to all of you who want to be able to invest but have no idea where to start or how the stock market works. Well, you're in luck. This video's for you. Hey, what's up? I'm Russ, and this is Dapper Dividends, where we are working to make our money work for us because we know that one day we will have to have our money working for us so we can stop working for it. And that's what we talk about here on the channel. And if somebody like me, who was raised lower middle class, jumped into the Navy right out of high school, no college, came back, got into the trades, where I've been doing that for over 20 years, swinging hammers, working outside, climbing ladders, welding. If I can figure that out, you can figure that out and be successful at it too. But more importantly, this is all about you and why you're here. Now, if you don't want to research, analyze, pick stocks, read financial statements, spend countless hours going through earnings reports like some lunatics like myself do, then you're in luck. What if I told you there was a way that you could buy virtually every single investable stock on the United States market all in one shot? Well, you're in luck because Vanguard's got you covered. Vanguard was founded in 1975 by famed investor John C. Bogle, who structured Vanguard as a client-owned mutual fund company with no outside owners seeking profits. Now, that makes Vanguard really unique because they are not publicly traded to this day, meaning there are no outside investors that have to be pleased. And the fund shareholders are the owners of the company. That's us. So when we do well, Vanguard does well, which is why Vanguard has such a great reputation in the financial world. The only thing you will ever need to buy as a completely passive investor is the Vanguard Total Stock Market Index Fund Admiral Shares, or as we lovingly call it, the VTSAX, which is its ticker name. Admiral Shares, I know what you're thinking. Admiral Akbar, right?
It's a trap.
Well, it's not a trap. All that the Vanguard Admiral Shares are is a different class within Vanguard. Basically, they have a lower cost structure than the investor class shares, and those investor class shares require a $10,000 minimum account balance. So now that we're on board, let's pop on over to Vanguard and snoop around. So before we get started, I want you to keep this in mind that over the history of the stock market, it has gone up and to the right. Check out this chart beginning in the 1870s. This is a few years old, but you can clearly see that if you just hold, it will go up and to the right. That is what the stock market is designed to do. That's what it has always done, but it's punctuated by periods of bear markets and recessions and pullbacks, but they always correct. They're fantastic opportunities to buy more and ride the wave up. All right, on board the good ship Vanguard, the quick summary is that this was created in 1992. It is the Vanguard Total Stock Market Index Fund, and it is designed to provide investors with exposure, immediate exposure, mind you, to the entire U.S. equity market, including small, mid, and large cap growth and value stocks. It is everything in the US market. Now, a couple numbers to point out. It does have an expense ratio of 0.04%, meaning that every year on a $10,000 balance, you will pay them $4, which is nothing. Now, there is a minimum investment of $3,000, but wait, don't panic. Take a breath. It's okay. Vanguard's got you covered. We'll come back to that But I want to touch on a few more things first. The current price as of this recording is $114.01 with a current 30-day yield of 1.14%. Look at the hypothetical growth of $10,000 invested in 2011. It would have went from $10,000 all the way up to $44,870. Dios mio, that's a nice return over the last 10 years, and all you had to do is just put that money in and let it ride. Now, they do weight the companies differently. They don't give a blanket weighting to every company, so the stronger companies are going to make their way toward the top. The cream rises to the top, where you can see that number 1 is Apple, number 2 is Microsoft, Alphabet, Google is number 3, Amazon 4, Facebook number 5, Tesla at 6, followed by my guy Warren Buffett's company, Berkshire Hathaway, which I contend is a mutual fund in and of itself, Nvidia Corp, JP Morgan Chase, and my number 1 favorite dividend stock, Johnson & Johnson, rounding out the top 10. So when you invest into the VTSAX, the bulk of your money, 23.60%, meaning that out of every $100, $23.60 is going to go to just these top 10 companies. Check that out. When you buy the VTSAX, you are getting instant exposure to 3,935 stocks. You're getting almost 4,000 companies that you're buying with that one share of VTSAX. And again, the expense ratio is 0.04%. Compare that with the average expense of similar funds, that is 0.83%. And you can see on that $10,000 invested over 10 years, that would have run you $95 compared to the category average of $1,893. So you would have saved right there $1,798. I think that's fascinatingly cool. And of course, the dividends or the distributions that you get from holding this, that's the passive income. Remember, you're going to keep the share price, whatever that will be, and you will receive quarterly dividends. So the last dividend distribution was 0.326 cents, so just over 32.5 cents, and that was paid on June 24th. You can see that the pay date was June 24th. Before that was March 25th. Before that, December 24th. So every 3 months in that cycle, 9, 12, 3, 6, you will receive distributions. You will receive that sweet passive income. That's the money for doing nothing else in the form of a dividend. Now you're saying, but Russ, I don't have $3,000. How am I going to do this? Don't worry, I said Vanguard's got you covered. We've got you covered through an ETF, an exchange traded fund. Now, the easiest way to explain this is that the VTSAX is a mutual fund and the VTI is an identical fund, but it is an ETF, an exchange traded fund, meaning that it will trade like a stock. And as we're going to see, they are nearly identical in almost every single way, except for a few itty bitty teeny differences between expense ratio and dividend yield, and a few other things we're going to get into right now. So you see, it is the VTI, the Vanguard Total Stock Market ETF. Again, total stock market. So the expense ratio is 0.03%, but remember that the VTSAX was just a notch higher at 0.04%. So on $10,000 invested, you're paying $4 to hold the VTSAX, and you're paying $3 to hold the VTI. And you'll notice that the market price is north of $200, so it's a little bit more expensive at $234.24. Has a 30-day yield of 1.15%, where you'll remember that the VTSAX was just a notch lower at 1.14. And the hypothetical growth of that $10,000 invested in 2021 would have grown to $44,875.25. I believe that's about $5 more than the VTSAX. The 10 largest holdings are identical in weightings. Again, this is almost identical in every aspect except that you can buy one share of the VTI, what we're looking at here, the ETF, but you cannot do that with the VTSAX. You need a $3,000 account minimum in order to buy those Admiral shares. Now, when your VTI hits $3,000, unfortunately, you cannot convert that to Admiral shares, but what you can do is sell your VTI, and if you have a gain on that, which I'm assuming you will, you're going to have to pay capital gains tax on that and then buy the VTSAX mutual fund. So that could be a bit of a negative, but let's take a look at a couple other things that may affect your decision. The VTSAX is a mutual fund, meaning that the price does not change and fluctuate during the day. With all mutual funds, their prices change at the end of the day after the market closes, usually within the first 2 hours of the market closing. And again, the VTI is an ETF, an exchange traded fund, meaning that it trades on the stock market just like any other ordinary stock would. One thing that the VTSAX has that the VTI does not is you can auto invest and auto withdraw. And that is very important, in my opinion, to be able to automate your investing. When you don't even have to think about it, the money just automatically comes out of your account, doesn't even touch your greedy little paws, and goes right into getting itself working for you and making you money while you sleep. And if I wasn't a good saver, I would start with 1% of every paycheck. You're not going to notice 1% missing. And then every 6 months or every year, build up to it. Bump that up to 2% and 3%. And before you know it, you'll be at least 10%, which is what I think is the minimum number of your income that you need to be investing. So if you're okay with manually investing and you use Vanguard to manage these funds and you use Vanguard to trade, then there's no commission fee on the VTI. So I would say have at it, stick with VTI, which is virtually identical. And another one of the drawbacks with the VTI and the VTSAX is the lack of international exposure. The only international exposure you will get is from the companies that are traded on the US stock market that make their money overseas, or they make a good portion of their money overseas. So if you're okay with getting international exposure that way, then I think you would be fine with either of these. And they also do not have exposure to bonds. So it's completely in stocks, which to many people they think is way too volatile and way too risky. But I would say that it's not risky because we know from the charts we've seen that over the lifetime of the stock market, it goes up and to the right. But it is volatile. There are periods where you can see by the red that we've been down for sometimes years at a time. So the best rule of thumb is to hold. Do not sell. Use those opportunities when the market is pulled back to buy more, because we know that it is always going to go up and to the right. And if companies like Nike and Amazon and Google and Apple all collapsed and the market went away, baby, we got problems, and your money being tied up in the VTSAX is going to be the least of your concerns. So because I'm a fan of automating saving, I would lean toward whether you have to save up the $3,000 in your checking account, in your mattress under your bed, whatever you have to do, I would lean toward the VTSAX. If you're using Robinhood or any other platform than Vanguard, you will not be able to buy the VTSAX because, as you see here, Robinhood does not support mutual funds. So to buy the VTSAX, that has to be done within Vanguard. And if you're using any other platform, you will be able to buy the VTI exchange traded fund. Now, I do not have an account at Vanguard, but if you would like to open up one at Vanguard, super simple process that you can walk through, and I'll have a link in the description below if you want to click on that to check things out for yourself. And always do remember, unlike Robinhood, these reputable companies, these brokerages, they have customer service and actual people that you can talk to. As you see here with Vanguard, they are only Monday through Friday, but you can call somebody and talk to a person about your account on the phone. It's crazy, I know. If you have under $10,000 in your brokerage account at Vanguard, they will assess a $20 annual service fee. make sure that you sign up for e-delivery to have that service fee waived. And that's how easy it is. Ain't that right, my man?
Easy peasy lemon squeezy.
And if you'd like more easy debt-free journey tips, click the video here. Join us on our journey by hitting the subscribe button, and we will see you there.